Real estate investment presentation. Existing home sales. Get ready because we're raising the stakes with real estate. As we think about the existing home sales, we want to be looking at the statistics with regards to our personal real estate investment strategy, noting that this kind of statistics are generally compiled and put together to get an idea of the overall health of the economy, as well as the health of the housing sector within it. We want to be comparing and contrasting the overall health of the economy to our particular needs in the particular area that we are in, and tailoring that information to our individual real estate investment strategies. Keeping that in mind, note that we're going to be referencing Investopedia by Julia Kagan. Investopedia being a place you can go to look up investment-related terminology and continue your research from there. So what are existing home sales? Existing home sales transaction data measures and reports sales and prices of existing single-family homes, condos, and co-ops for the United States. It's broken down by region, that being West, Midwest, South, and Northwest. So you can get this general data there and get the trends, and then you can try to compare and contrast that to the sales that you're taking place in your particular region, which you could look up with more real estate investment tools and websites. This metric can be contrasted with new home sales and housing starts. So remember, what we're concentrating in on here are the existing home sales, and that we've looked at in prior presentations, the new home sales or home starts. Now, this is going to be important when you look at it basically on a national level. You can get an idea of it, and again, you can look at it basically on your local level where you're planning on investing in. And there's a difference between these two things. It's a big difference in terms of, are we creating new supply for home sales? People are making new homes and then moving into those new homes. Or are we having a situation where there's turnover that is happening with the existing home sales that are out there? So there can be a really big difference. Then the question, if there's turnover with the existing home stock, the question is, why is there that turnover? What's driving that turnover? And again, that's something that you want to see on a national level. You'd also want to drill down on the local level to try to get your investment strategy lined up the way you want. Remember that we've talked about the difference between the new starts of the houses could be a pro and a con. If you got the new houses that are being constructed in a particular area, then it could have a positive impact because it allows you to basically invest in it. Typically, new housing increases more supply. That means it's going to be cheaper typically, but it also, due to the fact that there being more supply, could drive down the prices of the current homes that are in there if you're in a high demand kind of area. Whereas if you're talking about housings that are basically turning over for one reason or another, then, and there's not new homes that are being constructed, but there's still sales that are happening, possibly sales going up, that means that people are moving in and out of the existing home stock. And the question there would be why? Why are they moving in and out? Are the prices going up and they're taking advantage of the increase in the prices and moving to somewhere cheaper? Or what's driving, in essence, the turnovers? The population changing, in size, where people are retiring and possibly moving somewhere else or moving into that particular area. What are those kind of things that are driving that kind of churning over? And how can you work that into your particular investment strategy? What do you think is going to happen? Remembering the fact that you're looking at real estate generally for a fairly long-term frame. So you're trying to predict basically trends that are going to go happen into the future, comparing and contrasting the national trends to what you think are going to happen in the region where you want to find the value that you're looking for. So what we have here, this metric can be contrasted with new home sales and housing starts, which both track newly built homes rather than existing housing stock. So then we have the existing home sales report is released monthly by the National Association of Realtors, the NAR. So you can look them up. You could use your favorite browser, look up the National Association of Realtors. You can find this report based on closing residential real estate transactions. It is a lagging indicator since people often make housing choices in response to changes in interest rates. So when you try to look at this, what they're saying here from an economic health type of standpoint, then it's going to be one of those lagging indicators. It's not going to be the first kind of indicator to indicate whether or not there's a change in the general economic environment going up or basically going down. It's going to be a lagging type of indicator because people will typically do that in response to, say, rates. which will be more of a leading kind of indicator. So understanding existing home sales, according to the National Association of Realtors, the NAR, the reporting of most existing home sales transactions happens after the closing and so does not consider pending sales still in contract. So you have some kind of timing differences with regards to when are they going to actually track these things, due to the fact that, of course, it takes some time for the actual transaction of a sale to take place. The majority of transactions usually involve a mortgage, which may take 30 to 60 days to close on. So again, if you've been through, the real estate transaction itself can take time from beginning to end, which again causes this time lag sometimes. As a result, existing home sales data most likely includes contracts that were signed at least a month or two before the report is published. So sources of home data. Many different reports analyze the housing market in the United States. These various indicators look at several different aspects of the housing market and give insight into buyers' activity and regional trends. So again, your goal is to look at these kind of reports and look at it from the standpoint of how can I get these normal trends in terms of basically the broader trends, and then see where I stand with regards to my more local trend, the place where I'm particularly investing in. Why or why not do I think that there's going to be a valuation in the place where I'm currently at that could take place over a significant amount of time, projecting into the future, as the housing investment is something that's going to be a longer term investment. The NAR created a new monthly series in 2005 to overcome the lagging effect of existing home sales, called the Pending Home Sales Index, the PHSI. Like new home sales data, the PHSI can be viewed as a precursor of burgeoning home demand. The release of this report is during the first week of each month and is measuring housing contract activity. The basis of the index is on signed real estate contracts for existing single-family homes, condominiums, and co-op properties. So the housing affordability index, so you could take a look and look up favorite browser, housing affordability index measures whether or not a typical family earns enough income to qualify for a mortgage loan on an average home at the national or regional levels based on the most recent monthly price and income data. So basically, obviously when you're looking at the regional level where you're actually investing in versus the national level, you want to take a look at basically the ability for the average person in general, the affordability of the home, and factor that into your particular real estate investments. What's the strategy of your particular real estate investment? What kind of people are being attracted to it and why? And then you could use that and say, will that trend continue into the future? So Realtors affordability distribution curve and score measures housing affordability at different income percentages for all activities inventory on the market. Now, again, when you're looking at affordability, you got to take that into your consideration in terms of what's your overall strategy. Are you looking at a housing market where you expect it to go up in value, and you're looking at houses which are basically a place in area that's above the affordability limit, and you expect it to continue to increase in that way for some reason? And or are you looking at housing that is more affordable and in an affordable kind of area and possibly has the capacity to increase in value over time? Obviously, as an investor, if you're looking at purely from an investment standpoint, you're trying to do the old buy low, sell high thing, right? So where does it stand at this point in time? What's likely to happen at the future point and why? For each state, the curve shows many houses are affordable to household ranked by income. The score represents affordability for all different income percentiles within a single measure. Sources of data continued. Metropolitan Median Home Prices and Affordability publishes statistics each quarter, so you can look them up as well with some more statistical data. Separate price reports reflect the sales price of existing single-family homes, condominiums, and cooperatives homes by Metropolitan Statistical Area, the MSA. A quarterly qualifying income report shows the income needed to qualify to purchase the median price existing single-family home in each metro area, given a variety of down payment assumptions. So the sources continue. The county median home prices and monthly mortgage payment indicates median home values for 3,119 counties and county equivalents in the United States. So that's a way possibly to drill down a little bit more in depth as they're breaking it down into the counties. Its calculation comes from comparing the house price index growth from Federal Housing Financing Agency, FHFA, to the latest housing data from the American Community Survey. Home values represent the value of all homes instead of home sales. Once again, we're referencing Investopedia, a place you can go to look up investment-related terminology and continue your research from there. Existing Home Sales by Julia Kagan, updated March 3rd, 2021. Remember that as time passes, they update periodically there at Investopedia, so you can go back there and see if they've updated their information at a later point.